Well, on to an exclusive conversation now. Latika Chopra, Executive Director of Consumer Research at JPMorgan, is now joining us on the sidelines of the conference they are holding, the India Investor Summit 2023. Latika, good to have you with us here. Thank you for waiting. Before we sort of get into specific sectors or sub-segments in terms of your coverage universe, broadly a comment on consumer demand, which seems to be, at least at the lower end, hurting by all indications. Just your assessment of it briefly before we go any further.
Yeah, sure. Thank you for inviting me for the show. So if I talk about the staples demand, clearly rural has been fairly painful, over much of the last 1 year. And if you look at the Nielsen data, the good news is that we've started to finally see some recovery settling in. After 5 quarters of negative volumes, finally we moved to the positive volume growth zone starting the June quarter. And when we speak to a lot of corporates as well, what we sense is that volume growth at the margin is improving. Of course, a lot of this growth is coming off a low base, but nevertheless, it's some improvement that's underway. And we hope, that this gradual recovery in rural is going to continue. And this is what our base case is also assuming. One of the bigger drivers for this improvement, in our view, is going to be moderating inflation. Product prices have stopped to inflate. Rather, in certain pockets, we are actually witnessing deflation, which is allowing consumers to come back and spend. And the other bit is that, FMCG companies themselves are upping the ante on advertising and promotions, further inducing, consumption demand to revive. So we're hopeful that the mass consumption will gradually, improve in the coming quarters. And what we're assuming for our staples pack is also that the volume growth, which is hovering in, flat to low single-digit zone right now, will gradually gravitate upward towards about mid-single-digit plus kind of range in the coming quarters.
Latika, you want to segment the consumer demand in the various categories for, say, FMCG, urban and rural, the paints, jewelry companies, because you do track a couple of these, large jewelry companies. Do you want to talk about consumer durables? Can you segment, the outlook and what you're picking up on the ground in terms of demand for each of those categories?
Sure. So I talked about the rural bit, but just coming to urban, and let me start with the FMCG bit. FMCG demand in urban has been holding out quite well, right? For much of the last year, it's been tracking well ahead of rural, though that gap is now narrowing given the recent uptick that we've seen in rural. But on the discretionary side, the urban discretionary demand has been quite soft. So, you look at QSR, you look at, consumer durables, you look at fashion. These are the segments which have been affected adversely, on account of higher inflation, impacting the disposable incomes. But at the same time, what we believe is that starting December quarter, there will be some green shoots that are going to emerge. One, the sectors are going to start lapping a low base. And two, of course, the moderating inflation will allow consumers to come out and spend. Now, if you look at the high-end consumption, and jewelry companies, since you mentioned, the organized jewelry players definitely are gaining, market shares from the informal market. Of course, there are a lot of initiatives from their end on product, on distribution, on very attractive offers to consumers, which are allowing them to grow well. And they also kind of target the higher-end consumer, which is probably less affected by the inflationary pressures. So jewelry demand has been good. Paints demand has held out really well, and there the B2B, the real estate, cycle improving. All of those factors have also benefited. Going into December quarter, also we will see the festive demand. This time the peak festive season is a little later, mid-October to mid-November. And we are hoping that this is good. And that's again going to, kind of support the discretionary demand in urban segments as well.
Latika, it's a strange kind of, in a way, dichotomy, right? You've got consumption, which is hurting, but government capex is pretty strong. The point is, if consumption does not pick up, there's no need for industries to put up new capacity, or at least expand significantly. On the other hand, one can argue and say that because all this, infra spending is happening, that will create jobs and boost consumption spending. What's the view at JPMorgan? I mean, between I don't know if you and your infra analysts have that debate. but how do you think about this?
See, for the sectors that I cover, I think companies are here for the long run, right? So, the near term can be volatile. There can be ups and downs on consumption trends. But the broader story is that the Indian consumption story is all about penetration. And then, of course, in FMCG, we talk a lot about premiumization. And to drive penetration, yes, I think companies are adequately investing behind capacity additions, wherever there is a need to be. Over the years, we have seen FMCG companies bringing a lot of outsourced manufacturing in-house, and they have been investing in building large-scale, manufacturing units to tap into the whole growth potential. So we do not see dearth or, companies really stopping capex, at least for the sectors that we cover. Again, even in durables, we continue to see, companies investing behind adding more capacities, because the view is that medium to long-term growth is pretty much intact in India. India is all about longevity of growth. And the other bit which is interesting that's happening in the consumption space with the market leaders is they're very open to explore, new segments, right? So portfolio diversification is another theme which is at play, for most of the sectors that I cover. And companies are trying to build those medium long-term drivers. So I don't think companies in any way are pulling back on capex in our sector. Of course, they are prudent about, how they spend so that return ratios stay intact. And of course, M&A is another aspect where we have seen, companies willing to put up money, selectively.
Latika, out of time. Thank you very much for joining in. Enjoy your conference. And once again, thank you for joining in.